Test, test, test. Hello, 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 hello. Hi all and welcome, welcome, welcome to another edition of Midday Market Review. My name is Phil. I'll be your presenter today. So let me just see that this is all working okay. And we are streaming properly. Sound good, everything okay. All very, very good. Okay, so brilliant. For those of you who are watching this for the first time, my name is Phil. I'll be your presenter today. If you're brand new and you're looking for some education, check out my trading skills. Over the past 10 years, I had the privilege of talking in front of various different industry events, and I've been trading for a while. And I taught many people how to trade. Now check out the courses on my trading skills, see how we teach. Most of them are free actually, so check them out, see how we teach. And then if you need help with anything else, let me know. This brings me to a disclaimer. What I'm trying to do here is I'm trying to replicate what we are teaching in some of the courses. It's a very simplistic way of trading based on the prevailing trend, i.e. trend following, price action trading, and also price pattern recognition trading. So very, very simple approach to trading. No complicated indicators, no complicated strategies. Very, very simple. This is what I firmly believe a novice trader should be able to do. So therefore, these are my opinions and experiences only, and it should not be taken as advice. And in particular, since we are talking about some live trades, or I might be placing a live trade during this session, this is for the proof of concept of how to analyze the market, how to enter the market, and how to manage your trade. So that's basically what it is. From the live trades, apart from, sorry, I should have changed the date here. This is 23rd today. This was yesterday's trade during the session. For those of you who watched yesterday's session, you saw that. And I've closed half at 37.28. And then I also closed the other half at 37.37. It was basically a really logical approach with a stop loss management, and I had a few trades after that, but they were not discussed here during the broadcast, so therefore I'm not going to put them on here. This is the only one that I had kind of live. So currently at the moment I have nothing open. And I will go and check out a few markets for you. We'll talk about some economic data. We'll talk about some key trading levels and see if we can set anything up for the trade. If you have any questions, feel free and ask. If you are in the community already, feel free and ask your question there in the normal chat room. Otherwise, if you're watching this outside, you can also reach me in the chat with the chat functionality. Now let's go and check out a few things. Let's go and check out a few things. What was that noise? I know. Sorry. Here is the one that I don't normally. Look at, and also we have. So what I'm doing here now is I'm just pulling some charts. Just pulling some charts here. Okay, I'm gonna leave that running here for now, and I'll talk about it in a minute. Okay, so what should we really pay attention to today? From the economic data point of view, it's Thursday, so we have jobless claims. Canadian CPI 3.9, year on year 7.7, forecast was for 7.3, so high inflation in Canada as well. Initial jobless claims 229,000 versus 226,000 expected. This is in US. How many people are claiming US unemployment insurance? Slightly higher number than just slightly. There isn't very much from the economic data for the rest of the date. There's a Fed's Powell, Chair Powell. He's due to testify. It does this annually. That starts at 3 o'clock my time here, which is in about 52 minutes from now. That could trigger some volatility in currency crosses, which are US dollar currency crosses. So euro dollar, sterling dollar, dollar yen, dollar CAD. This is also triggered by Canadian inflation reading. Anything basically dollar might move as well. Apart from that, really very little. I'm just scanning here through some news. International International Agency statement on delayed data. The oil inventories data scheduled for 11 a.m. today Eastern time is to be delayed. No clarification on timing given. So crude oil, normally this comes up on Wednesdays at 3:30 my time here, but because we had a market closure on Monday, that normally moves the crude oil inventories to the following day, which is Thursday, which is today, and I think they come around 4 o'clock, 4 o'clock my time, which is about 2 hours and 50 minutes roughly from now. No, 1 hour and 50 minutes. Sorry, 1 hour and 50 minutes. Apologies. And that might trigger some movement in crude oil. But according to this, there'll be a delay. Russia will make Eurobond payments. Source says Germany to declare phase 2 out of 3 alarm stage of the emergency gas plan. Russia's oil rose 10%. India total imports since April. Kremlin says Russia is a very reliable energy supplier to Europe. It fulfills its obligations. A UK Northern Ireland Protocol bill will return to Parliament on Monday. Putin, Russia is ready to further develop a cooperation with BRICS nations, which is good, I suppose. Guys, sorry, very little. Very little to report in relation to economic data. Now, from the US equity open.
I'm hearing that Powell's prepared testimony to the House is the same as the Senate, the Fed says.
So even the talking news squawk is quite really very little today. Very little today. Um, Pre-US Open, EU top economies slow significant as manufacturing cools. EU power soars to 6-month high on Germany gas supply alert. EU's top economies slow significantly as manufacturing cools. UK economy running on empty. A recession signals mount. This is another headline. UK consumer spending softens. Jobs ads fall in past week. British Parliament to debate Northern Ireland Protocol bill on Monday. Norway Central Bank makes largest rate hike in 20 years. Debt costs add to UK government borrowing in May. The Reserve Bank of Australia to hike by half a point at next 2 meetings. This is expectations from the market analysts. Xi vows to meet growth target that analysts say is out of reach. 10-year Treasury yield slips to lowest level in nearly 2 weeks. Foreign bill out of Japan bonds at record pace on Bank of Japan policy. Euro falls after weak PMIs. Norway crown shines. A retreat in oil prices as investors reassess recession risks. European Union power soars to 6-month high on Germany gas supply alert. Qatar to demand EU sign long-term LNG deals if it wants more gas from Qatar. Futures are up ahead of Powell testimony. EU stocks pair losses. So that's basically, these are the headlines. If you have traded already, you already know where to get this type of information. You're probably getting your own source of news. But very little to report. Very little to report from the economic data point of view. Nothing really of interest here. So let's talk about a couple of things. First, let me see if there's. Hi Chris, good to see you. Are you looking at anything? Let's talk about Dow quickly, because that should be the first one to start with. We had a massive attempted oversold rally yesterday. So this is a daily chart of Dow Jones, which is in my book still downtrending. We have sequence of lower highs. There's a massive amount of resistance here, and then also here. So that's the first level of interest for the bears. All of this appears to be an oversold bounce back. Now I was looking at this as a bearish continuation to the downside, which is basically what happened here. Now this pattern is morphing into something a little bit more interesting. Now we can see this in 2 different ways. We can see it as a potentially a larger scale coiling price action. So it could finish as a pennant or maybe even a symmetrical triangle or ascending triangle of some sort. And if that's the case, the price would break to the downside. So the price will do something like this. It would lose this support. Then we could see a little bit of a retest from underneath, and then the price will gradually carry on moving lower to the downside. And people who would kind of trade that type of pattern, they would take the widest point of this consolidation here and extend it to the downside, and this would give them a target which is 29,400 or thereabout. Now it's not the exact science. It's quite subjective to how people measure this. Where do you measure it from? Do you measure it from the closing or opening price on a candle, or do you include the wicks? where is the exact breakout, and so on. But it gives you a rough idea. It gives you a rough idea of what other traders are looking for. So when they are entering, you want to make sure that you are aware of that. If they enter, where would they put a stop? Up here, so you want to be aware of that. If the price reverses and goes through that, they'll be picked up, and therefore price will create a short squeeze and push higher. So if anybody does get into this trade, where is it likely that they would take profit? Well, down here. Why? Because of this logic that I've just explained. So if you are in this position, you might be looking to take profits slightly before them, or partial profits ahead of those levels, and then at least moving your stop loss lower, because what will happen when the price does go there, you could see a big reversal higher. So it's important for us to know these multiple layers of evidence and the zones or the areas where the price might do something. It's almost like a self-fulfilling prophecy. It's not a complicated thing. Markets are kind of fairly simple. This is fairly simple approach to analyzing the market and identifying the level. Now the other, I said this could be interesting, and it could be interesting because this can morph into something like this. So counter trend bullish traders who are looking to buy the bottom are looking at this as a shoulder head with another shoulder forming here. Now it's not a completely clear cut, and the only way for us to know that this is inverted shoulder, head and shoulder with the neckline up here, if we see a price push higher and break through these highs and then do something like this. If that happens, then that would trigger a short squeeze. Basically anybody who's still holding shorts longer term would likely get freaked out with this type of move, and then the price could very quickly do something like that and spike higher, and that will be measured from the top of the head to the neckline extended up, and then that brings us to an interesting level from a higher time frame, because then you have this falling resistance trend line, you have the fibs from here to here, you have previous clusters of the lows, you have these lows here. There's something up here that could be of interest to us as a potential counter trend take profit area. So far this needs to develop, this needs to play out in one way or the other, and this is a major resistance. So I would like to keep an eye on this level down here at 30,300. So I'm going to write it down. So 30,300 for Dow, and if the price dips below that level, I would likely be a seller. So what I mean by that, I would like to see a full hourly candle closing below, or 4 hourly even better. If you're trading as a short-term intraday scalper, your trade might be triggered in a 15-minute or a 5-minute time frame, but then also your stop is tighter and your take profit is different. It's based in that time frame. So, but from a swing point of view, I would like to see a sell-off, 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 and loss and price closing below this level, at least in an hourly. So big, juicy red candle closing down. If that's the case, I might be looking to short, maybe with an order, with a view to take profit down here towards 29,000. 780 and 29,400 to the downside. In that case, my stop would be just above 30,450, so about 150 points of risk for potentially 600 or maybe even 900 points of potential gain. So really good risk to reward ratio. The other alternative is if I see a push higher, massive bullish breakout and a price breaking through here, then I could possibly consider going long above this neckline, which would be about 30,750 with a stop yet again 150 200 points below, with a view to take profit at 31,200 250, 31,700 on the upside, so almost 1,000 points on the upside for possibly 200 point of risk, 5-to-1 risk to roll ratio. That's where I'm at the moment. I have nothing open. I might have a limit order in place, but at the moment I have nothing open, and that's what I'm looking at. That's Dow. I'm just gonna leave it. Sorry, apologies. I'm gonna leave it here like so that you can see it. S&P and Nasdaq. Multimedia for everyone. Hi multimedia. Good. Hi, do you need anything covered? Now, Chris is saying, can we check out S&P and Nasdaq? S&P, let's do that now. We're about 7 minutes before the US markets open. Look, it's really dead. It's really quiet. Now, this is a daily for S&P. This appears to be an oversold bounce back. Now, this area, firstly here, these lows would be of interest. This is yesterday's breakout and then support to the downside. So let me just readjust this and explain what I've done. Now I'm going to remove this fib and I'm going to move this up here as a resistance. And then this becomes support here. Okay, so yet again a very similar setup that we were talking about before. Downtrending market, there is a rising wedge. They have the tendency to break to the downside. There was another consolidation here which broke to the downside. This was short-lived. It didn't create another lower low. So we have low, lower low, lower low, lower low, lower low. So this is selling. Double bottom, same low. Now this here can morph into a first higher low. So now this could be a beginning of maybe an oversold bounce back and a push higher. And if that's the case, then the same logic will apply. So we have two options. First option is this is a larger degree bearish continuation pattern which represents a coiling price action. It could become a pennant, it could become ascending triangle or a symmetrical triangle, something like that. And what they do is they have the tendency to break to the downside. They have the tendency to do something like this: sell off, sell off, sell off, a retest from underneath, and then off we go lower, and this makes a new lower low. Now the counter trend traders are saying this sell-off is overextended to the downside. Maybe we could see a bit of a kind of a short squeeze and a push higher, and that's perfectly fine. In even most severe downtrending market, you have this beautiful rallies which are so powerful, fast and furious. So then this will become something else. This will become a shoulder with the head, and then this becomes a shoulder here as well. So left shoulder, head, and the right shoulder. It's not exactly the textbook because there's a little bit of a sloping neckline, which is fine. That's okay. There is no perfection. If you're looking for a rigid perfection trading financial markets, which are basically very random, and the price action is random. We don't know what the price might do the very next second, but over a longer period of time, we have a fairly good idea who is more dominant based on the prevailing trend. Are sellers more dominant or buyers more dominant? And you want to trade with them rather than against them. That's the basic premise. So what I'm seeing here is if this does in fact become shoulder, head and shoulder, then sorry, what am I doing here? something like this will happen. So you'll see a nice breakout to the upside and then push lower, and then that would create a short squeeze pushing the price higher, and people who are looking to trade that will take the distance from the head to the neckline and extend that to the upside to potentially give them the resistance, and then if you project that to the left, this gives you roughly these lows here. So yet again, and then you would have something like this in play. Yet again, not a textbook, but it gives you the idea of previous swing lows, falling resistance trend line. I can draw a fib from here to here. This will give us an area of interest as well. So a basic premise for that type of pattern. Yet again, this is a longer term. This is a daily chart, but key trading level for me going forward for S&P is at 37.55 to the downside. Let's be precise. 37.45. If I see a pullback to that level and a loss of that level, a candle closing below that level, retest from underneath, that will trigger a bearish continuation to the downside. Otherwise, if we see a bullish breakout higher and close about 38.15, 38.20, then possibly this is developing, and then we could see a short squeeze and a push higher. So maybe I can just, so multimedia is saying DAX. Okay, I'll cover DAX. Yeah. So S&P point of control for me is at 37.45, 37.35. So that kind of zone. About 10 points. For breakouts above 38.15, 38.20. There we go. That's your S&P. So hopefully this is helping. We're at the open now. Let's see how this plays out. I have nothing open at the moment. I'll be disappearing for a bit after today. So I'll be back with you here in the broadcasting, daily broadcasting frequency in about 2 weeks time again. So taking a break now. I know, sorry Chris, you were asking about Nasdaq. I'll cover that. Let me just cover this for multimedia, because he was talking about DAX, and we talked about DAX yesterday. So now let me just show you where we are. This appears to be a bearish consolidation. This is a daily time frame, and the price dipped lower. We are coming to a major point of support, which is this current swing low here. So if we see a loss of that, off we go lower towards 12,400, a major dip lower. There's really nothing. It's uncharted territory below that, because there's only a big wick there's no other previous highs and lows on to give us some guidance of the price. Hey Patrick, so good to see you as well. You're looking for EuroCAD. Now, in relation to DAX, if we go from the kind of intraday point of view, this looks bearish. This also looks bearish. I don't really have anything else to add to this. So as long as the price stays below, there we go. Yeah, it's 61.8. This was based on the same premise that we did before. Oversold bounce back. 61.8, off it goes lower and so on. So now this can become a double bottom, but I wouldn't be trying to catch this. I wouldn't be buyer here because you can see there's a severe selling price. Hey Hamid, so good to see you. So good to see you, Hamid. And Said, and also Goldmaster, and Eladio, and Nathan, David H, Bob, Tamiz, Sadeep. There's quite a few people in. So going back to this, let me just see. Adolfo, Alan, Marble, Matthew, Nikki, Palmer, Wendy, anybody else who is watching us? Welcome, welcome, welcome. So the idea is that this could become a significant loss of support for DAX, and then we could see another leg lower. The economic data that's triggering all of this, so I'll just delete all of this and make it kind of more visible for you, is that production data, and also I don't know if you heard I don't know if you've heard, I was talking about what...
So we're 10 minutes away now to the preliminary June release for the US US manufacturing PMI, as well as the services and composite PMI rates. So looking through the expectations here for manufacturing, 56.0 expected versus prior 57.0, a range seen of 53.5 to 58.0, while the services PMI rating 53.5 expected versus prior 53.4, range 52.0 to 54.2. 6.
And where was that one? So that was a big thing. That was a big thing. So yeah, this looks bearish. I wouldn't buy it. I can't buy it here because you need some sort of reversal or something. But everything is pointing to more selling pressure. So there's a falling resistance trend line here. There was a loss of support and the retest. a daily close below these lows would likely be quite bearish going forward. Resistance on the upside 13,100. So push higher, a daily close above here is required before an oversold bounce back creates a push higher towards maybe 13,400. But that's it. This looks really bearish, guys. Really bearish. Look, you have these lows down here. Yeah. How low can it go? Well, it was down here before, 12,600. Possibly even down here it was 12,400. It is possible, but it does look really bearish for the DAX or German 40. This was renamed. This used to be called DAX 30. Now it's called DAX 40 because of 40 companies in it rather than 30. And that's it. So whatever happens in Germany or announcements relating to any concerns in Germany, powerhouse of Europe, manufacturing, anything to do with gas shortages and basically triggering alerts for energy consumption, that kind of stuff. It's not good. Stock sell off. Stocks sell off quickly. Sorry, let me just see. Patrick was saying, can we check out EuroCAD? Oh, you're welcome, Multimedia. You are welcome. Thank you for asking. You're more than welcome, honestly. It actually helps me, guys, because I know. See, when you do this type of stuff, you're talking to the screen. You don't normally see the faces of the people in front of you. So if you're in the office environment, like trading floor environment, or a group of people trading in the same office, you would see other people's body language and see their face or reaction. Or if you're if I'm presenting in front of the audience of some sort, you can engage and understand very quickly what makes sense, what doesn't make sense for them. You get a sense for where the people are at their kind of experienced level or exposure to the market and so on, and then you can give them more of what they need. What I'm doing here is actually really difficult because I'm speaking to a bloody camera, and I sound like I have a monologue with myself, so I don't see you, I don't hear you. So when you ask a question in that little chat, or if you come to the community and you ask something or post something, that's a great help, because then I'll know what you need. Sorry, Philip, shut up about that and show me EuroCAD. Okay, so let's go and find out EuroCAD and see where we are with that. New chart window. Sorry, just checking to see Euro Aussie. There is a trigger here for Euro Aussie. Dow is moving higher a bit. Is it good for a scalp? We'll see. EuroCAD. Let me just put a very basic template here. Price only, no grid. Daily, yet again, fairly clearly defined downtrending market. I mean, you can't do anything with this apart from look to short sell. Longer term, weekly, this is a short sell. Look, it's the same pattern that we talked about, just on a larger scale. If you're trying to do anything else, you're going against the trend. It's difficult. we have sequence of lower highs. There's a bit of a consolidation here. If I go into a daily, maybe becoming a triple bottom, but the only way for us to confirm that as a triple bottom, if we see a breakout and a daily or a weekly close above 1.3830, so something like that, and then this becomes low and low.
3 minutes
and
now
low.
until the release of the preliminary June reads for manufacturing PMI from the US, with 56.0 expected. Services PMI 53.3, with a composite PMI read 52.9 expected.
And then you see this, and then people would say, oh, I'm going to take this many points and extend it to the upside, and then this gives you a resistance, and then if you project that resistance to left, there's a low, 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 low. So support, 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 loss of support. Guess what? Woo! Resistance. Woo! Resistance. We're going to do it again. Woo! Another resistance, and off it goes lower. So now you're privileged to my sound effects as well. This tells me that I need to be away. I've been doing this for too long. And this looks like a triple bottom, and off it goes. So look left, there is resistance 140, 150. Most of the people who are looking to trade this would likely take profits there if they're going counter trend. The alternative or a trend following strategy would look like this. You would see a dip lower and the loss of these lows. So these lows down here, apologies, like that. So this is a significant low. So sideways, 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 consolidation, and then what happens is the price does something like this: dip, 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 dips lower, retests, and then off it goes for another leg lower. That's where we are with Euro CAD. Now, can we put some fundamentals with this? Well, keep an eye on what European Central Bank might do or say at the next meeting. It's very likely that European Central Bank will hike rates.
1 minute to go now. 1 minute.
Because inflation is really, really high. Canadian Bank of Canada as well. That's driven by what they're trying to do and how they're trying to battle with inflation. And also with the Canadian dollar, you need to know there's a high correlation between Canadian dollar and what crude oil is doing, because they are the net exporter of that commodity, and therefore the higher prices in crude oil is usually perceived as a good for Canadian dollar as well, because they're producing the bloody thing and exporting it. So that's where it is. So keep an eye on that as well. That's where we are with Euro CAD. Patrick.
10 seconds. $52.4 for manufacturing. Services at 51.6, while composite 51.2. Tweet, that's the US manufacturing PMI dropping below expectations at 52.4, was expected at 56.0. For services PMI, again a drop below expectations at 51.6 versus expected 53.3. That pushes the composite PMI to 51.2, a drop from the prior of 53.6.
Very, very little that we can do here at the moment.
So looking to the report here, they note the US economy slows sharply in June amid renewed downturn in demand, but inflationary pressures are cooling.
Okay. I am looking at S&P at the moment. Trying to see, I'll show you what I've done.
Looking closer to the report here, they note that the corollary of the drop in demand was less pressure on prices, with the survey's inflation gauges for firms' costs and their selling prices falling sharply in June, suggesting that, although it's still elevated, price pressures have peaked. So overall, the manufacturing PMI, that's the lowest since July 2020, as well as services PMI, the lowest since January 2022.
So this is a 15-minute price chart for S&P. We were looking at this resistance up here. This is the breakout. I'm looking at this now as a look, 1, 2, 3 green candles. There's a bit of indecision here, a little bit of indecision. This is followed by red candle, which is almost half in size than this previous green one, and this looks like a evening star reversal. This type of patterns, they have the tendency to break to the downside. They have the tendency to carry on moving lower. Now if you go into a 15-minute time frame, this looks like 1 2 3 4 5 yet again fib number 2, and then off it goes. So textbook would say that you would have this many points. Sorry, I should use the different color here. This many points, and then a little bit of a retracement here, and then you should have another leg lower towards 37.60 or thereabout. So that's the kind of expected price action. If the price pushes through here and closes above here 37.90, all bets are off. So then something like this happens, and then that negates that possible setup, and this becomes something different. But that's where we are. From the economic data release, the trigger is that PMI. 51.2 composite PMI, 52.4 manufacturing PMI, and the expectations was for 56, so much lower than expected, and that's where we are. So let's see if we get something set up there. Okay, thank you, Patrick. We are slowly approaching the end of today's session. If there is anything you might want to know, let me know. Okay, we didn't talk about gold today, so I'm going to do that very, very quickly. I still have my point of control at 1850. I still have my support at 1825, and 1876 is resistance. Now, this is a big reversal, retest, and then off it goes lower. So here we go. So I can draw a trend line here. Support, support, support. I thought we could see a breakout, pullback, and then another leg higher. Now this is all forming something different. So it's forming something like this, and it's forming something like that, which is a little bit more bearish.
So we're 10 minutes away now to the top of the hour as we wait to hear from Fed Chair Powell for a second day, testifying before the House Financial Services panel. Reminder, we did hear a clarification from the Fed earlier today that Powell's prepared testimony to the House will be the same as the Senate yesterday. So note here from TDS, they note that like yesterday's appearance, they don't expect Chair Powell to deviate too much from the guidance provided after last week's Fed meeting. We have posted a link onto our board to watch the event live.
Yeah. Okay. Guys, hopefully you're finding this useful and informative and beneficial in some way. I'm still keeping an eye on this S&P. Oops, sorry, what did I do? Didn't drop my S&P. That's a gold. I'm still keeping an eye on this S&P to see if we are going to get any reaction, either a breakout or a flush below these lows here. for possibly another leg lower. So something like that. Something like that. Let's see. Okay, it was lovely talking to you all. Hopefully you're finding this informative and beneficial. From the open trades, I am currently flat. Hey! Hi Raj, how are you? So that's where we are. There was a closed session, closed trade, the one that we were talking about at the beginning as well, and yesterday. Big disclaimer, it was lovely talking to you all. Stay safe, happy trading, and I'll speak to you all in about a couple of weeks time. So in the meantime, stick around. Talk to you soon. Bye for now. Hey, Robert, thank you.